Jim, you are on fire.
I write a code to basically automatically trace the big price and try to.
You might be a beginner trader. You might also be the next Stephen Ducks.
I didn't do anything special for this period of time. Like, it's just exactly executing the same code over and over again.
Welcome to Undiscovered Traders, where we focus on the charts, stats, and edge with the latest six-figure. This trader is going to be very quickly seven figures the way he's going at the moment. Today we're talking to Jim. Jim37 on Kinfo is his handle, trading from New York City, the land of hopes and dreams. He's up 484,000, of which 338k is in the last 3 months. 221k is in the last month. Jim, you are on fire. What is I don't want to build you up too much, but you are on fire right now. How are you?
Good. I'm good. Yeah, thank you for the invitation. I always appreciate the Kinfo, like websites like Kinfo. I had a hard time finding basically filtering out scams and fake gurus when I start to learn trading, and I found Kinfo and everybody there is just legit and real masters, and I just follow the trades and follow the leaderboard and try to find the resources from them, and the learning curve is just went smooth from there. So I really appreciate websites like Kinfo and other places, especially for beginners like me.
I would like to think that you weren't a beginner, but I love the humility. But no, but it's so true, because if Jim living in New York City just said, yeah, I'm a trader, I made $221,000 last month, and no one had ever heard of you, and it's impossible to prove without Kinfo or a broker statement, but even then broker statements can be manipulated a bit, no one would believe you. But now we can say, this guy is up nearly $500,000. It's awesome. I just want to ask first, do you want to throw out any names of any gurus or fake gurus that you came across to make sure no one else gets tricked by them?
Oh, I don't think I want to without anyone publicly, but yeah, I mean more than one for sure. I think that's fair. Yeah.
And then is there anyone on the leaderboard that you've been followed that you do want to give a shout out to that you've learned from?
I'm still in the Clover trading group, and I have been Stephen Duck's group, Team Sites, what's the name? Oh, Roland Wolf. Yeah, a lot of real masters, and I learned really a lot from them. And I'll have to say I'm still a beginner for sure. I started full-time trading since January 2024. So I opened up my first account for just day trading on exactly January 1st, 2024. So now it's a year and a half past. So yeah, a little bit about my story. I used to work in Google as an engineer. So long story short, I was basically enchanted by AI and then disenchanted by the whole, the field. And because at the end of the day, it just feels like it's nothing but a day job, it's not as glamorous as I thought it would be. So I was and I got to learn trading I think pretty occasionally from Stephen Ducks. I think that was the first one I heard of, and then starting from there, I just kept learning from different people and get to know more about this field, and get to actually do it and practice, and here it is.
No, that's really interesting. So you've gone into all of the different rooms, which is what a lot of traders do, learn from everybody, and then you've kind of created your strategy based on everybody's learnings. Is there one particular mentor that you have as a favorite, or?
I'll say Mike Huddie was I used to be basically copycat of him. So basically, actually now I would say I'm still half copycat, because I basically short gappers, but I don't short just like from the market open and then cover at the end. So I did a little bit tweak and change of based on his strategy, and I write code to backtest my strategy, to optimize strategy, and also like execute strategy. So now it's like a fully automated trading for me.
Oh, wow.
Yeah, so I guess that's part of the reason why you can see the curve just going up and like pretty fast. Because that's what I believe. Like if you want to persistently be profitable, you have to be as mechanic as code, you know.
Yeah,
In
absolutely.
order to in order to like get these consistent results all the time. Yeah, basically.
But one question, and we'll bring up your profit chart. Are you using any artificial intelligence in your learning or your strategy right now, or is it like kind of only the automation side?
Yeah, I use it, but not in the way you're thinking. I don't use it to like to have it come up with a strategy for me. I think it's possible, but I don't think currently. I don't know how to do it right now. Basically, I use it to have it write code for me, and it's especially useful, especially when it's building from 0 to 1, like 0 to 1 prototyping. That's especially useful that I found, because like a lot of things you don't know during this 0 to 1 building, and you can basically just ask ChatGPT like what is this and how to do that and things like that, and he will just do it in a snap like that. So yeah, I would say like without ChatGPT, I wouldn't do this whole trading so fast and profit so much.
You knew how to write code beforehand, or I presume
Sure.
in
Yeah.
Google, yeah,
Yeah.
but it's accelerated it. And can I just ask, for anyone who wants to go down that route, can you just give a quick outline of the tools that you're using?
You mean the AI tools?
Yeah, or software, or the software that you're using for the code and the
Oh,
programming and the.
so it's nothing but Dust API. So like the command API. I'm basically using that. So it's like from 0 to 1, you have to because like the DOS API is like a socket based API. Like you have to send command and then receive response from the server, things like that. So you have to like start from the very bottom. You build helper functions to like create socket connection, and then on top of that you build like send and receive function, and then on top of that you build short command like shorting, covering, buying, selling, and this whole like level by level building. So yeah, that's sort of how I build the whole thing. um,
So it's like when a stock has this float and this volume and reaches this percentage of pre-market on the day, is it you'll fire an entry there, short, if it reaches this cover?
yes, strategy wise, yeah. So I have some like conditions that the one stock needs to strictly match in order for me to enter and exit. So yeah, for example, like the gapper has to gap up in the pre-market for at least certain percentage, and a market cap has to be no more than a certain a certain value, and things like that. And then once the market open, I use the code to tell me when to exactly enter, and then and the same thing for exit. And one I would say like one advantage, I don't know if it's advantage, but I found it pretty helpful, is that I cover during the after hours, and during backtest, it's super like superior compared to just covering at the end at the market close. So yeah, so one thing about that is if you manually do that, it's gonna be exhausting, right? You have to like track last price or track bid price all the time, and it's pretty slow, and you need to like emotionally be stressful in order to because you have to face like the illiquidity issue and the large spread all the time. So that's the part I think my code is the most helpful. So I write a code to basically automatically trace the big price and try to get the optimal exit price, basically.
But is that synced to your broadcast? It's all automatically executed, or are you still pressing the buttons?
Right now, it's able to automatically do the whole thing without me touching anything. But sometimes I still want to manually involve. Sometimes it's just my emotion. Sometimes it's like I know, for example, like the locate fees. If I do that early, and it's gonna be much cheaper than just having the code to do it after market open. So I still can resist sometimes.
Yeah,
Yeah.
it's like it's like a Tesla. It's like a Tesla car. It's like
Oh yeah.
it's 99% there. You're 99% there, but you've still got that 1% where you want to have the control of the car. You don't want it to be completely automated just yet in case it crashes and kills someone.
Yeah. So that's why they keep calling it like assistant driving, right? It's not auto driving.
But it's the same for your strategy. It's slightly assisted because you don't want to crash or anything and lose a lot of money.
Yeah. You know, one thing about this is like I was back in Asia like 3 months ago, so I have to make the whole program automated because I have to sleep in the time zone. So that kind of pushed me to automate the whole thing. Because before that, it was actually partially automated.
Wow. Do you want to bring up your profit chart? We'll just have a look. It's incredible that you've made this amount of money in this short amount of time. I don't think I know anyone who's made this much money except Stephen Ducks. Who's done almost 500,000 in 18 months. So you're on track to have some amazing results. Do you want to talk us through a little bit of your
Yeah,
chart?
yeah, sure. I think like the if I have to say like the most surprising part is ever since June 1st, or maybe to be more exact, like June 8th, and ever since then it just boost. And I didn't do anything special for this period of time, like nothing special for me. It's just exactly executing the same code over and over again during the past months. Nothing fancy. And actually, you know, right before June 9th, like this day, June 7th or 8th, like there's a huge drawdown there. And the thing is, it's okay. It's regular. I double check it. I triple check it with backtest results, with everything else. It's fine. Even though, like what happened here actually happened is I took 2 full stop losses,
Yeah.
which rarely happened both in backtest and live testing for this year. But still, it's just like a coincidence. You know, it's just 2 full stop losses happened the same day. Nothing weird happened. So I like stick to the strategy and kept going. I just kept going, and you know, then the market just boosted. And again, like nothing fancy here, like nothing special that I did here. It's just like the market fit my strategy pretty good.
Yeah, no, I don't know what it is, but it's the market in June was very favorable for all traders because I say a lot of traders having six figure months. I say a lot of top traders having big months. So it seems that the market's favorable in terms of volatility. And is this specifically just shorten the stocks that gap on day one?
Yes. Yeah. Right.
Incredible. And do you have a couple of examples of one or two charts or anything like that we can take a quick look at?
You know what? I prefer to show my like failure cases. I think
Absolutely.
yeah. I think that would make people learn more, and I also learn more from other people. So yeah, it looks scary to be honest, for sure. But this is just it is what it is. Like in my strategy, I kept a very big stop loss threshold. It's actually like from the profit chart, you can tell it's like close to 100%, which
Yeah.
is which is true. And this is also backtested. It's not like something I just randomly set. By setting this to negative 100%, it achieves the optimal Kelly criterion. I use this Kelly criterion like ubiquitously because I found it really reliable. So basically, Kelly criteria is like a value between 0 and 1. It's actually the maximum percentage of your account you can bet on, but I use it as like a score of my strategy. So the larger, the better, right? And by setting this 100%, actually Kelly criterion achieves optimal for some reason. I guess that's the nature of shorting, right? You have to allow a large range of volatility over there. So yeah, I stick to this large stop loss, even though it's scary, even though when it happens, it's like pretty hurting, but yeah.
Yeah.
Um,
I think I can understand because just for people who don't know, I used to short gap bars all the time as well. So I think June's had a lot of gap bars. The market's been pretty hot. There's been a lot of gap bars. These companies are 99% total trash. So if you short them at a certain gap up, it's not likely that they're going to go another 100% above where you've initially shorted them. Some will on rare black swan events, but the vast majority won't. But what you're talking through here is two occasions where they did go 100% above the entry.
yeah. So the thing is like, the reason why it works is because for a lot of stocks like this, they go up, but right below 100%, and then they go right down, right? So
Where
that's what I found in the back test. And that's what I found, like this large stop loss is actually better than the lower stop loss, a smaller stop loss. Because like if you set it lower, it goes up and it triggers stop loss, and then it goes right down. And then you're like, oh man, it's I botched it again, things like that. Actually, it happened to me back in January of this year, when I was still using a very low stop loss, and I was stopped for 4 times in a row. And
Yeah.
right, I realized that there was some problem in my strategy, and then I changed it to this current one. And then since February, it just went up.
Yeah, because I've seen several different trade a similar theory with gappers, and many of them will do a 40%,
Yeah,
40% stop loss just because like it still can be profitable under the right criteria, but like you don't take those big 100% losses because the problem is when something's up 80, 90, 100%, you start thinking, I don't want to cut this loss because surely it's hit 100%. It's not going to go much further. But
yeah,
you've literally got to take the loss or the system doesn't work.
yes. I like strictly follow my strategy everywhere. The point is that you have to be strict. Um, and actually from this stop loss, you can actually determine your size. Right? You have to use a small size all the time, which I do.
Yeah, and
So
I guess that's another thing because I can tell because if you've had if you lost 100%, then obviously you're taking $30,000 roughly or $27,000
mm,
in 28,000 on each short, and then you can make 10%. You'll make 2K, 3K, but on if you ever lose, you'll lose 28K, but you'll win much more than you'll lose, and that's basically
yeah,
uh,
yeah, that's the thing, right? That's the thing. That's just part of this part of the evaluation of a strategy, right? Which is risk reward ratio, which is what you mentioned. But that's just one part. The other part is the winning rate, and the Kelly criterion is calculated based on both, right? Both winning rate and risk reward ratio, and they combine these two and give you one number, and that number tells you how good your strategy is. So actually, my back test tells me during the past 10 years, except 1 year, my strategy achieves a win rate larger than 75%, which is ridiculous, I know. But like, first of all, it's like there's no slippage and fees. But still, my point is, if you combine this win rate with the low risk reward ratio that you just mentioned, you still achieve a very good Kelly criterion number. That's why it gave me high confidence of keep going on this.
What was the account that you were starting out with when you first started doing this?
So on January 1st of this year, I cleared out all caches and only kept 100K.
100K.
Yes, for this account. Yeah.
And then you've obviously grown that from 100 to 500,000 or 600,000, is it?
No, it's 500K right now, but not 6 yet. But yeah.
Is there any other trades you want to? I think we're okay, right?
Yeah. You know, because like I saw the other interviews of you, like a lot of people like analyze the charts and the candles, but I don't really do that because like everything is done by code. So these are the two most recent failure cases, and they just went ridiculously high and stop me out. So I just want to show like my stop loss and my point, the point of my strategy.
Very interesting strategy. It's one I'm familiar with. It's kind of a famous. I think it's the first red day in shorting GAPAs in the various ways are the two most popular strategies that I know, but very, very few can execute them properly. You've executed them in a way that's been possible over 10 years. The main question that I've got for you is you need a high win rate. You have to be to some level selective on stocks. Does that mean certain countries you're not going to short the tickers, or does it mean certain sectors in the industry you're not going to short?
You know, yeah, that's the funny part. I used to think like what you said. I used to think like I cannot short stocks with low float or with a price between, you know, 0.8 to $2, like some stock around $1. I learned all these criteria from other people, right? From all the resources I got. It turns out from my backtest, it turns out these are not as useful as I thought. So if I dropped them, actually it was better. So there was a term called overfitting in machine learning, which means that your backtest is pretty good, like your evaluation, whatever it is, your evaluation on your selected data set is super good, but when you actually use it, it's terrible. And that's because your model is too complex that it only fits your data set. It only fits your evaluation. It doesn't fit the real distribution of the real data, right? So actually, I believe this is what happened back in January, where I have a very low stop loss and I have other criterions that filters out those like so-called unqualified stocks. And then I removed them, and actually now it was better. So yeah.
Does that mean that you're shorting the 30-cent stocks and stuff like that as well? 20 cents, 30 cents?
Yes, I do. Yeah, actually, I do. I actually, my lower bound is actually, I think it's $0.1. Yeah, just like $1. I do that.
Not
Yeah.
not
$1.
one. So like, is that 10 cents?
10 cents. Yeah.
Nice. And obviously you're very systematic, very, very data driven. For a new trader that wants to get into this, do you have any advice on getting started?
Sure. So I thought about this. I think like, yeah, from what I learned from other groups and from all the occasions, I feel like a lot of people, especially beginners, they trade with ideas. They're not trading with strategies, or not at least not the strategy that I understand. My understanding is strategies, you need to find patterns that repeat. But a lot of beginners focus on patterns, but not the second part, which is repeating. Repeating is actually more important. So how do you know if it's repeating? You have to backtest. That's why I believe backtest is the core of everything, especially if you are a beginner. Like if you are already a master who trade for like 5, 10 years, that's fine because you already have those experiences. Those can be treated as like a they're more than backtest results, right? Their experience is the most valuable thing. But if you are a beginner like me, I'm still like 1.5 year experience. I have to do backtest. I don't know any other better way. I have to do that because that will give you a result over 5, 10, even more years of trading results. And from those results, you become a master, basically, right? If you become the strategy, you execute the strategy strictly, then you become the strategy. And because that strategy has run for 10 years during the backtest, now you become a guru with 10 years of experience. So that's how I see it.
If you do fit the strategy within 10 years, you can't overfit a strategy based on 10 years, can you? Because it's based on 10 years. Or can you
Yes,
still overfit?
yes, it still could. Overfitting is a tricky thing. So I don't think there's a 100% perfect solution to overfitting. But if you can backtest for at least 10 years, then I think that will be enough. Because like it will it will cover at least one bear market and one bull market, right? One basically period of like the change of markets. So, and also you can learn a lot of things from 10 years, right? Like probably the president has changed, probably the global economy has changed, political situation has changed. If your strategy still works, then that means your strategy is robust to those things and it's less likely to overfit.
Yeah, and it's funny that people have these ideas of trading being ideas, and I guess it's because hedge funds who bet billions and billions of dollars might make a long-term bet on something, and they'll have an idea based on hundreds of analysts and hundreds of researchers all coming up with an idea of all of these macro trends. But for us micro cap 10-cent dime traders, the only thing that you have is repeatable patterns in the last 10 years of what they've done. So we don't have the hundreds of researchers and analysis, and these companies aren't big enough to analyze, right? So I guess you're using the only thing you have to the maximum advantage.
Yeah, I guess so. You know what? The funny thing is, I talked to some guys from Wall Street.
Yeah,
they also do backtests all the time. Like their manager said, if you come up with an idea, you go backtest it and show the result to me. You have to do that. Like even though it's not about patterns and not about technical analysis, even though they are like trading fundamentals or news or whatever, they still need to backtest it. And the most expensive thing on Wall Street is data, which is the oil for backtesting. So it basically shows how valuable it is.
I've heard this as well. I've heard that I've heard a hedge fund will not take a trader on unless he's got three or more years experience, 3 or more years proven track record. Certain like hedge funds, or if he doesn't have 3 or more years, his strategy has to be backtested and proven to work over X period of years as well.
Yeah, that's true. Yeah.
So if there's one message from this whole thing, it's if you're not backtesting and you're losing, you probably should be backtesting.
Yeah, because that's the one thing that bothers me from the beginning, like all the time. 'Cause I see so many strategies, fancy signals, indicators, MACD, RSI, whatever, and oh man, like I was troubled and confused all the time. Like how can I do this, right? Like how can I combine all these and which is better and which is worse? And then I realized, okay, just go evaluate it. Like evaluation is the most important part, like, right? Otherwise, like you just keep coming up with new things and you don't know if it's profitable or not. And so it's less meaningful.
I 100% agree with you. My backtesting when I was trading a couple of years ago, all my backtesting was done manually on Excel. I tracked about 5 his records. But
As long as you backtest for enough years, that's fine, I think.
Yeah, that's the problem. I backtested across 2 years, 500 or so records, and but then the criteria changed, and I hadn't backtested enough years, and I started to lose. So that's it worked, and then it didn't work. But from what you're doing, so one final question for anyone who's wondering? So where are you getting your source of data from to do the backtesting?
I use Polygon.io.
Okay, there you go.
Yeah.
So it's through via Polygon. And do you have any? I think the interview's been fantastic. I think you might be a beginner trader. You might also be the next Stephen Ducks because I've not seen anyone with a profit record like yours. Do you have any final advice before we close out?
Sure. Yeah. I guess like for beginners, just keep fighting on, like keep going on. Like if you have a big loss for some days, like don't give up. It's super normal. Like if I like when I recall my first 6 months, it was like horrible. And luckily I broke even for the first 6 months.
It's incredible that you didn't have a drawdown. Really, really appreciate you coming on. I'm really excited to see where you end up on the leaderboard. Are you on Twitter or X, or is there anywhere where people can follow you?
I do have X. Well, yeah, I can.
We'll put it in the description right now. It's going to be in the description of the episode.
Sure.
Thank you for doing this all transparently.
Yeah.
Thanks for your time.
Again, like thank you for like doing the Kinfo stuff. Like it's super helpful for me, and I believe it's super helpful for beginners, other beginners as well. Yeah, I really appreciate it.
Cheers.